we will call the meeting to order. I will read a statement of announcement and we'll approve the agenda. A meeting notice announcing the date, time, and place of the March 4th, 2020 meeting was distributed March 2nd, 2020 to appropriate media and other groups of individuals who have requested notification. The announcement and agenda were posted at the Department of Disabilities and Special Needs Central Administrative Office and on the website. All right, so we'll move to the adoption of the agenda. Hopefully everyone got the agenda, and does anyone have any changes to the agenda? And if not, then I'll make a motion for it to be approved. Anybody want? Okay.
Aye.
Okay, great. So all in favor? Yep, say aye. All right. So the agenda is approved. Adoption of the agenda is approved. We provided the minutes from the February 5th meeting. So any additions to the minutes or changes to the minutes? And if not, I'll make a motion to approve the minutes from February the 5th. Get a motion to approve?
Second.
Great. All in favor? Say aye. Okay, great. All right, so the first item that we're going to talk about are the contract compliance recoupments, and Pat, I will let Pat take that topic.
Okay.
Okay.
What we're trying to do with this forum, and I appreciate you guys having this forum once a month, is to just to give you a greater understanding of complex topics. And I think Mary's instruction was to, in her state director's report, she will alert you as quickly as reasonably possible so that you're not surprised. Use this meeting to fill out the details so that when we get to the commission level, there's a level of understanding of a complex topic. So thank you for the opportunity.
Okay.
This is for information. We're not asking for a vote.
Okay.
And again, this is a pattern we've been seeing over last year. Is we've identified a legacy problem. We want to describe the problem to you and the impact of the problem, and then we're going to tell you the direction for a solution. It does have some sensitivities to it, so we're just going to be as transparent as we can.
Okay.
The story of the recoupment issue. Last fall, the quality manager came to executive management and said that BDSN has not paid its recoupments for the past 3 years. And recoupments is just a standard process that they use in contract it's in contracting with HHS, where we establish certain quality indicators. Some of them are marked for recoupment, meaning if you're non-compliant, you run the risk of a payback of services provided. And our methodology has been Alliant goes out, identifies the indicators, they go to quality management. Quality management will get them, give them to the program people, and the program people look at them in a more detailed review to validate what the Alliant auditor found. And when they look at the details, sometimes they throw out the recoupment because of very specific reasons, and then whatever's left on the table, we have to recoup and pay HHS the 70% match. Well, when we looked at that and found that we had not paid him for 3 years, we looked into it, and then it led us down the path of a larger problem.
Okay.
And the history of the problem is, in the past, BDSN had its own internal audit program, auditors, and when they went out and did audits of providers, they did audits, they did reports, they just didn't recoup. HHS sometime in the 2007, 9, 10 period of time said, no, you guys have to establish recoupment indicators and recoup for noncompliance. So we did that. HHS provided the guidance as to what equals recoupment, and one of their issues had to do with very technical, if you had technical noncompliance on anything having to do with case management involving a payment document, you had full recoupment of the services, even though the error by the provider fell in the category of human error and didn't affect the rate or the payment or the service. It seemed to be completely disproportionate compared to the compliance nature of it. HHS wouldn't back off on it. So DDSN in year one made an internal decision to recoup, but only for 1 month. HHS did not go along with it. They said, no, we want full recoupment. The example I would give you is if the support plan said services were for 10 PCA hours a year, but the actual authorization was for 10 hours a week. Obviously, 10 hours a year is nonsensical. It's just not even relevant. And the preparer would say, well, I meant week, not year. Because of the difference in words, they would recoup whatever services were provided that year over 10 units for the year. It was a hyper-technical interpretation of the recoupment policy. I can't explain it, but that's the way it was. So DDSN at that time made an internal decision to continue the recoupment process, calculate the recoupments correctly, and then just take DDSN resources and pay the recoupments and not actually recoup from the providers. Okay, that has multiple downsides. One, purpose of recoupments is to have a deterrent for providers to stop whatever conduct they're doing. And secondly, we're just basically taking our base funding and paying HHS 70%, which in 17 was over $1 million. So we're looking at a situation where we were not doing recoupments correctly by recouping from the providers, which only perpetuated the problems. And secondly, we're taking our own funds and making payments just to stop the issue. If you look, it's not inappropriate for a organized health care provider like us to pay them, but paying 100% seemed way disproportionate. We met with HHS, we analyzed a year of activity, and we identified that the singular problem is these case management human errors that don't affect payments, that were, I call them draconian recouped. And when we brought that to the attention of HHS, they have not made any decision on it, but we met with them and we met with, they manage another waiver service, the CLTC waiver, which is about the same size, $800 million. And we talked to their compliance people, so HHS's own waiver would not recoup on these technical requirements. So they, I think generally somewhere in the past, their waiver people over us interpret it differently, or
there was a bad relationship.
Their motivations, whatever it is. Mm-hmm. So after looking at that and meeting with our new waiver personnel, and we're looking at the Alliant indicators that we're changing to bring more substance to it, they have said that they see our point, and I think they agree in principle with eliminating this particular overreach in the recoupment methodology. And so we're in a process, while we adjust our line indicators, probably due at the end of the month, we'll formalize a recoupment program proposal and then formally let you guys know as to what we're doing so that you're not surprised, engage HHS, and develop a recoupment policy that is much more pragmatic. And the one that we kind of settling on is I don't think anybody would disagree. If you don't have the major cornerstones in our services, level of care, you don't have a plan, and 3 or 4 other ones, there will be full recoupments. If you make a mistake that causes an overpayment, there'll be full recoupments. But for compliance errors that don't affect the payment, there will be no recoupment. And the only exception to that is there are going to be some group of administrative indicators that are very important. And the way the CLTC waiver works is they've identified that group, and they come up with a methodology of collecting them, aggregating them, coming to a score. They compare it to a table of I don't say punishments, but a table of actions. So if you score below a certain amount, there are certain degrees of punishments, and the punishment is not a recoupment of a service because you can't recoup an administrative indicator. But what it ends up doing is if you fail these administrative indicators, such as not getting staff qualifications or those type of broad areas, they will basically stop the provider from receiving new referrals for 30 or 60 or 90 days. So we're trying to follow their model, which seems very reasonable, and get that approved. And once we get that approved, we've got to train it and then give the providers time to add whatever business controls they need to protect themselves before we implement it. So whether we implement July 1st or October 1st, we have to have a working recoupment program that does what recoupments are supposed to do, which is basically find those areas that significantly affect the quality of the service, or is an overpayment, or a serious non-compliance error that has some financial penalty attached that is in the best interest of the program, so that the program operates in compliance and that the recoupment it incentivizes correct conduct but doesn't disproportionately punish a provider in a kind of, I don't say I said arbitrary way, but in a way that there's unlimited liability. Because if you start recouping on non-compliance that don't affect the payments, where does it end? And HHS has agreed with us. So the long story short is we had a 10-year legacy problem. We've identified it. We brought it to HHS attention. They're in agreement that if we model ourselves after their CLTC recoupment program, that seems reasonable. But until we get the details worked out and get them over, let you guys know first, and secondly, work it out with them, we will then have a working recoupment program that if done correctly, we should have no recoupments every year, because the punishment of a recoupment should deter people from a casual way of which these problems are caused. And for example, if you look in the last number of years, you had the same providers getting audited by Alliant and them having no plans, of which creates an $80,000 bill, of which we've been paying. And we've got to stop that. And nobody is in disagreement that needs to be addressed at the provider level. But the mere fact that we don't do it doesn't stop the cycle of noncompliance, and we end up doing it again. So hopefully that'll give you a snippet as we move forward. If you have any questions, let me know.
Thank you for that good explanation on a very complicated issue. How many years were we paying, these fees on behalf of the people that weren't providers that
we've not done a forensic all the way back.
Just curious.
We do know that we paid through.
It's Q3 2016 is the last quarter that we paid.
We paid. And it's probably been going on since.
But we didn't recoup them from providers fully.
Okay.
I think, as far as we can tell, a complaint came in, and even though the letters went out to recoup, all of them didn't get recouped because of the complaint that was lodged with central office.
But we didn't pay fourth quarter. We didn't pay 17. We didn't pay 18, and we didn't pay 17, 18. We should have paid. 19 is just being tabulated now, so we're not really late with that one. But if you look at the 17 calculation under the very strict recoupment, it was a $1.3 million liability. And my estimation is, if they allow us to use the new program and apply it to current liabilities, I'd say 30 to 50% of that would be reduced.
I don't agree. I mean, I'm not saying I don't agree with Pat, but I don't agree with what our group has done when they look through it and say, yes, recoup this, yes, recoup this. I don't agree with most of those yeses because of the way it's being done. It is a word issue, it's a technical issue.
Yeah, you showed me some of those, didn't you? That long document, or
I mean, they have recoupments for things like a projected training date that is not current. Well, in a CTH program, anything other than an ICF, a date on that is not even required. So if a projected date goes out, they're still collecting data and they're still making progress on it. Mm-hmm. There's no reason to recoup from that because training is happening.
Alliant was the one who said that they were...
No, Alliant is just picking it up based on our own indicators. HHS was putting the recoupable next to all the indicators.
Right, and you were saying you don't agree with what they're
No, I don't agree with how they're interpreting I don't agree with how Alliant's interpreting that. Because even if I have 3 objectives, one of them is done, and they're still training on 2, they're still doing habilitation. So I don't think that's a recoupable indicator.
Right.
Or it should be a percentage of, not the whole thing, because you're still doing the other parts of habilitation. And the other thing is a lot of the recoupables are in case management. If you've got a case management entity that is not providing the service, so they're like a third party, they only get paid for case management. So how are you going to recoup residential services out of them when they made the mistake? The residential providers got the authorization and they're doing the service. So I think the common sense test says that you dive a little deeper. Was the service actually provided according to what a residential habilitation is supposed to be provided? And if it was, it's not a recoupable. It might be a sanction if it's a serious infraction as far as words, but saying one term versus another because you picked something wrong out of a drop-down menu is it's absurd.
Right. And so you think DHHS is going to be in agreement with some of those things that are just don't make sense?
I think this is another example of
Or do you feel like
a
they're
problem. No, I think they do.
Okay.
I think they will.
That's good.
But I think this is just another manifestation of when you have a relationship where you can't talk to one another.
I know, totally.
They didn't. They just said,
Right, it sounds like it.
Here you go. That's it. There was no, I was in the room at the time when they were doing this, and we're like going, what are you doing? How are you going to recoup these administrative indicators? How are you going to recoup residential HAB for one person not having a TB test? Methodology for that. If you don't have a methodology, then it's not the right thing to do. So that is probably, if I've got 100 tests that were done and one was missed, that is not a systemic issue. You missed one. It's human error. And then, but if I've got one where 15 were missed, then we might have more of a systemic issue. So I have to treat that kind of stuff differently.
Did some of the providers pay the money back and some of them not, or none of them were ever asked to pay it back?
In 2016, we do the Alliant reviews over a period of time, and so whoever had their review done through September, it's fiscal year quarter 2016.
They handed. We always paid it, and in 16, there was a movement in this building to actually recoup. We got letters, we got all the recoupments, and we sent them out to the providers. And the providers got the letters, and immediately they started sending emails back describing the situations like Mary. So the outgoing finance director who handled this said there were no recoupments made. You found evidence that maybe some recoupments some were made. So there might have been a period of time where the attempt started, they did some collection, and then they stopped because of the pushback.
And due to the timing of the Alliant reviews, there's a group of providers that would not have been reviewed in that first 3-quarter period. So no, they've never seen anything
That's right.
From us at all, not even a letter to call and complain about.
That's right.
I think some people never got a letter. I think they started sending them out, and the people at the top of the alphabet got a letter.
Gotcha. That's exactly
And
right.
then it sort of snowballed, and they all replied saying, oh my God, I was in York, which is at the bottom of that. I never got a letter. Although I saw one that was written for us, it was $1,700, and I would have fought it. Even $1,700, I would have fought it. So, I think that, and it's not that we couldn't pay it, it's just the minutia of the recoupment. It's something worth fighting about, and if someone had the chance to fight it, kind of like on a larger stage, it might have gotten fixed back then. But again, just keep the waters calm. And you've seen how we've tried to make some changes and how many headwinds we've had to push against. I mean, it has not been an easy road to hoe. And I think that
Understatement.
yeah. So anyway, we're just trying to figure out what we need to do. We don't want to take back from providers. I can't go back 2 years, but when we set up the system now, starting in July with the new indicators, we're going to have to actually recoup. What we are trying desperately to do is take the recoupment time period and put it right up against the review. So in other words, crime and punishment kind of go together versus 2 years later, we send you a letter. That would just annoy the crap out of me. So what we're trying to do is shorten the review period and try to get the whole thing done under 90 days and then immediately send the recoupment letter out. Let's have our argument about it and then bring it down to an invoice. But have it done within that, 90 days. And if we have scores that are over a certain amount, our proposal to HHS is we don't do follow-up reviews. We save our resources to do follow-up reviews on people who continue to have the same problems over and over again. We just don't have enough manpower to keep going back to people who are doing a good job. It's again, we don't beat the racehorses kind of theory. But that's what we're proposing to them. So we haven't gotten there yet, but we're working on those indicators now. I spent 2 hours on them yesterday, and we're getting them down to a more manageable number, and we'll bring over our proposal to HHS. But they've been in all our meetings. When we have quality management meetings here, they're here. So we've invited them over when we started this process, and as we're going through this process, their staff is sitting in the room.
So this is Gary. I just want to weigh in. So this issue of recruitment has been one that has annoyed the heck out of me ever since my days back in York because of how it was handled. And I am 100% in favor of anything that removes these tiny minutiae administrative hyper-technical recoupment sort of situations, as Mary is well aware of from our time working together. The only thing that I would say with this, guys, it is our obligation to make sure that what we are potentially recouping on is crystal clear to the people that we could be taking money back from. I despise more than anything when somebody's lambasted by a bill that was barely mentioned, or 2 years later there's a reinterpretation. So I'm 100% in favor of this. I just want to be clear that we need to make this something that is viable for the people down the stream to understand and to use to make the service provision better as opposed to hyper-technicality. That's all I want to say.
Perfect.
As a provider, I used to encumber monies in a little separate to say this is going to be recoupment dollars. Like I would go through my review and I would say, oh, this is recoupable. I would try to figure out, because I never really had the methodology, but I would say from this time to this time, something was out of date. So I would put it over here. And I started doing that back in 2005, and no one ever came to get the money, so we spent it. But I think that was, we would do that. I just never understood. I mean, I used my methodology. I never had a clear-cut methodology from DDSN to do that. So that is something that needs to be remedied. And again, if we have that discussion after review's done, we have our list of recoupables, we've come up with a dollar amount, then we sit and talk to the provider one-on-one. Okay, can we get rid of this, or is this legitimate? Can we get rid of this, or is this legitimate? And we just go down the list. So I think that's pretty darn clear at that point when you're actually having a discussion about each thing. But if we wait 2 years, it's never going to be clear, because I'd be out there digging for papers and trying to find stuff to show how they're wrong, and I don't want that to happen. So this needs to be done anyway, and we also need to change these indicators to actually measure the quality of the things that we want to measure, because right now we're measuring a lot of paper, but we're not measuring quality per se.
All right. Any other questions, Barry or Gary, before we move on?
Yeah.
All right.
No.
Okay, then. All right. Great. Next item, DSN board's audit directive. Public comments have been received, and Chris is going to go over that.
Okay. We did put out this for public comment for the first time, to my knowledge, ever, which is a good thing. It really gives everybody an opportunity to give feedback and eliminate some of the confusion and lack of clarity when maybe we're writing a document that we think's clear, but then when you read it as an outsider, you're like, what in the world are you actually talking about?
Yeah.
We did get two providers that responded. One just sent an email, didn't respond through the actual comments process. His particular issues have always existed. I guess he's saying, while we're clarifying things, let's clarify these. In a nutshell, auditors are required to validate that all direct care staff make at least $13 per hour, with a few exceptions. And basically, he has a couple other exceptions that DDSN has approved just for his agency. And so he was wanting us to change the wording to basically state to consider any written waivers or other, approvals that DDSN may have issued when looking at, the $13. His example is, he got specific DDSN approval. Now, I've not validated this. This is based on what his email says. One of them, they're a live-in caregiver, and so part of the value of their compensation is they get to live there and have their meals provided for and so forth. And so they got a waiver to pay that person less than $13 because of that value. And the second one had to do with staff actually came and begged them to reduce her pay rate so she wouldn't lose her Social Security or have her Social Security impacted. And so basically the employee elected to not make $13 per hour. So those are the two exceptions. We obviously don't want to put that in the directive. That's too specific. But we can add some language to say, to consider any
Exceptions.
or something of that nature.
We have a request for exception to kind of standards, and I guess we can add directives in there if there's something that we need to run through. There's a process for that already. We could just apply it to that.
So that we will do a revision to clarify that. The other one was very, very extensive. I sent that out to you just because I just got it, and in between IT interviews and my other scheduled meetings, I cobbled together a quick response. The information provided if you'll pull that up, I emailed it to you guys on the phone, and then folks here, I handed it out. We've got the provider comment, we've got my comments, and then the recommended response. Now, this is all open for discussion, and in fact, I would suggest that I be given a chance to contact this provider and discuss my response to see if they agree, because we've got time between now and the commission meeting to work through any final revisions. But in a nutshell, my recap of this is there are some good points in here that we can clarify and improve and make sure that there's a little bit less lack of understanding, which was an overarching theme in this directive when I revised it, because as an auditor following this thing, it left way too much open
For
to interpretation, and as a result, we got results all over the place. So that was an overarching theme I had, so this is just an opportunity to do even a better job with those. Some of the others are more related to, why are we cracking down so hard on the auditors when there's already existing standards and regulatory bodies that oversee audit quality? My approach to this is, I've seen what we're getting. We have a huge, and Debbie will attest to this because she had to learn this herself when she started here. We have a massive diversity and competency in our financial provider network. We've got finance directors that honestly are very, very basic, and then we have more advanced, like Melissa here's a CPA with Babcock Center. So you've got a gamut. And then with the auditors, you also have a broad range. You've got a firm that does nothing but one audit of a DSM board once a year and nothing else. And so our industry is very, very unique. And you can't just dabble in DDSN and do a good job. You have to be all in. So in my review of the audit reports, we have major problems. We have gap weaknesses. We have Medicaid cost reporting weaknesses. We have cost allocation weaknesses. We have weaknesses in sampling. There's a whole host of things. Now, LLR is the Board of Accountancy. They get all these audits once a year. They have volunteers that come in 2 days a month, and they pick audits out of hundreds of audits. DSN boards are not picked for these because I was involved in that process, and I was the only one looking at DSN boards when I have ever gone. Nobody else knows them. So there's counties, school districts, municipalities, water sewer districts, all kinds of fire stations, all these things. And so as a result, the LLR review is kind of a false sense of security. because, yeah, they're going there, but nobody looks at them. And even after I found all the weaknesses and reported them to our investigator that was in charge, she said, look, I'm one guy. All we're going to do is send your stuff to the firms and ask that they look at it and update their stuff if they agree, and if not, there's no follow-up or repercussions.
What's LLR stand for?
Labor licensing and regulation. So the whole LLR process is really a joke, and they will tell you that if you call and ask them. I know the investigators over there, and they just will tell you, we just don't have the manpower. Secondarily, peer review is a process where you have auditors reviewed every 3 years, but you pick your own peer reviewer, which means I can opinion shop. I can pick a peer reviewer that I know is going to be easy on me. In fact, my firm struggled with that concept, like, are we going to hold ourselves and get a really picky peer reviewer or one that's a little bit easier to work with? And so the peer review process, I can provide the commission members with tons of data that shows that the peer review process is failing. Out of 100% of the audits reviewed, 20% of the audits, when reviewed by the feds, were actually correct audits. So there are 80% failure rate in audits. So the audit industry is under attack. And that's one of the reasons I got out, because I felt the pressure coming down on us with all the increases in peer review and things of that nature. I'm like, look, we do a good job. I'm just out. I'm tired of public accounting. So as the primary user of the financials, and everything we do is based on these audits, including our cost reports that I have to sign off on, the audit is used to complete the cost report, and any variance between the audit and the cost report has to be explained by the auditor. So it's the basis of everything we do. Every analysis we do, funding decisions, cost reporting, whatever. I am not willing to rely on the peer reviewer or LLR to determine audit quality when we know for a fact the quality's not there. So a lot of the concerns expressed related to us kind of that's not the terms used, is kind of overstepping our bounds, like getting into things that really we shouldn't get into. But as a professional that was in this industry, I disagree with that. I do feel like once we get our audit firms and our providers to up their game, we may be able to back off on some of this. We may be able to, release some. Right now, we're going from such a deep, dark depths of audit quality that we got to up the game. Once we get there and we're seeing that we're getting a good product and we can rely on it, then I feel like we can back off some.
Yeah.
So the majority of the things I disagreed with were in that area.
Okay.
Also, a lot of the things that were brought up related to things that have always been in there. The issue is the wording was so poor in the prior directive, and I'm not pointing fingers at Kevin. Again, it's the point of being clear to the user. So I'm not saying Kevin didn't write a good directive. It's just, if you're not trying to follow it and interpret it, I can't read your mind. So a lot of what we've done is just clarify the intent. I mean, Kevin was very involved in this. So everything we looked at, he's like, yeah, exactly. That's what firms should be doing. I was like, Kevin, but that's not what's in the directive. That says it nowhere. We have to outline what we're expecting.
Yeah.
And so he had even indicated that there were several firms. In fact, we're going to disbar one this year. He's already told the client they are forbidden to use this firm next year, and they're going to be tracked in our system. And so we have got to make sure that these auditors are performing properly. The other issue is we need to offer training. These auditors, they have CPE or continuing ed that's generic as all that you can attend. I've seen Melissa at several of these CPEs because she has to have education as well. Nothing is DDSN specific. If you go on the internet, you can't find these rules. They're not readily available. Even our own directives and our own procedures are not clear. So we have to, if we want to increase quality, we've got to have a training program so that auditors can say, okay, just tell me what I need to do and educate me, and I'll be glad to do it. And so that's a cornerstone of this directive is the training component. It's a 2-hour mandatory training. We're going to offer it at least 2 times. We're going to offer it through Skype as well, so you don't have to be here physically. And it's not going to be a huge lift for an audit firm to attend that. And if we offer CPE, which is another question that this person asked, I think that's a very good question because there are auditors that would love to have continuing ed. So anyways, in a nutshell, there's very few recommendations I'm making here. And so I would like the commissioners to maybe ask me questions at this point, and then as I stated, I would like to have the opportunity to talk to this person and discuss each one of these so that they understand why I've answered the way I've answered.
Okay. I know that.
Say that one more time about what you said about 80% of the audits that were reviewed by the federal were wrong.
So, remember when Enron happened?
Yes.
There was a lot of scrutiny of the audit profession. PCAOB was created. In fact, we're what's called a CPA profession is called a self-policing industry profession. We don't have anybody external that reviews us. We peer review. We review each other. We have nobody outside ever looking at our work. So what happened is the federal government, the GAO, is like, man, these audits stink. We have got to pull these and start looking at them because they're like us. They're relying on the audit. They're getting them, and they're saying this is complete garbage. And so they've randomly selected like 2,000 audits, and the failure rate is over 70%. It's not quite 80. And that's based on them looking at audit work papers, looking at procedures, looking at all the documentation in the file.
Okay, I got it, I think.
And I would say our rate's probably close to that. When I look at these audits, I can quickly see that's not right, that's a missing disclosure, this is not presented properly. So I would say our failure rate's probably close to that as well, to be honest.
And everybody needs to realize we're a regulatory agency. We're not just an agency that's just here to look around. We're supposed to be regulating these people to make sure these audits are correct.
That's the way I feel about it.
And don't we pull our cost report data
Yes.
on the report?
He said he covered
I don't think
that.
it's an excuse for not doing it for the last 6 years.
Now, I'm not saying that the audits are materially incorrect from a standpoint of a failure in the opinion. The thing is, each auditor computes materiality. I have no control over that. So if they're working with the organization that's $15 million, their materiality level could be $500,000. So in other words, they may pass on those adjustments and not fix those errors, but those are errors that we inherit. And so
That's right.
the issues I'm referring to are more disclosures and the back schedules where we gather all of our data from. Like Debbie tried to do cost settlements. Debbie Wilson's in here, our finance director of accounting and contracts. She worked for 2 or 3 weeks trying to get cost settlements done for 3 or 4 boards.
Yes.
They're still not done because we can't. The audit schedules are so unreliable.
You have to go back to the boards to actually ask them information because it's not in the audit work.
But it should be.
Yes.
Were you surprised you said only 2 people made comments on this?
No.
Or was it more than 2?
No, there was 2. I'm
Okay.
not surprised.
Okay.
The issue we have, to me, this speaks to the lack of knowledge. The fact that we only have 2 finance directors in the entire state that feel comfortable enough to read this document and challenge it. You have to feel comfortable with your skill set to step out and challenge something.
Yeah.
So the fact that we only have 2 people that felt comfortable enough to take that on just reinforces to me the lack of technical competency that's out there.
Right.
And that's on us. We've got to train our providers. That's part of what, you know, Mary's a huge believer in training, and that's really what a lot of our role needs to be. So it's on us. That's our fault. We've got to, that's why we're having this April 1st training, for example.
Yeah.
So.
Training and growing our replacements, too.
Okay. Gary, do you have any comments or questions? I'm pretty sure that, yeah, okay.
I do not.
I was just going to say that Chris is asking if he can take some time to call these one or two providers, and at that point, would you determine if you're going to make any changes to the directives, if you feel that that's necessary after those conversations, and you would share those with us prior to the commission meeting, or would we just,
so
are you wanting me to make a motion to say that something different? You know?
The way that I would look at this is the document I sent y'all and handed out is a standing document. This is what I would ask approval for, as far as there's no substantive changes here, but there are some good changes here. I intend to go back to the directive and implement these. If there are any further changes, then I will inform the committee and see what your thoughts are on those, and make sure that that is communicated to you all prior to the commission meeting, so that we have a final review prior to that formal approval.
Okay.
If that's all right with y'all.
Yes.
You have a different approach, Mary?
No, I think that you sit and chat, because you only have two people, so you want to make them, and they're knowledgeable, so you want to make them comfortable. Bring it back to this committee with your changes, and then.
Well, we won't meet again before the commission meeting.
No,
What you mean, through email?
Wait for the next. I think you should wait for the next commission meeting. I think since you guys meet once a month, I think it can wait. Can it not?
Well,
To the
Why does it need to wait?
April? Or do you think you need to do it now?
we need to do it now because we got to do training, but and auditors have to start planning. They have to know.
If you guys are comfortable with an email.
I just don't.
No changes.
I guess if once I had this conversation and they convince me that we need to change something, then if it's substantive, then I understand.
Coming back.
But my thought is, hopefully that's not going to occur. And as long as it doesn't, we can move to approval.
That's right. I totally forgot that you've got to get out there to get training done. I also forgot that we're into March already. It kind of slips by.
So I'll just make a motion that the directives will be sent to the full commission for our March,
for the
March meeting.
See?
And if something significantly changes in those directives, you will let us know prior to that meeting so we can look at them and have them ready for that commission.
Because most of the things that I'm seeing,
Commission meeting.
You're not recommending to change anything, or you're want to clarify some of the things that are unclear.
Right. So it's like you said, it's probably not going to be significant. It'll be minor if you make any changes to the last version we saw. Correct. Just to make it more clear, if you change anything, it might be to do that. And that you'll share those with us because we can see them before we vote on them in our next commission meeting.
And from a procedural standpoint, I think that's fine. I mean, we can vote to recommend this, and then if there's any proposed changes, that's not technically part of the recommendation, but it can be considered by the commission as a whole when making the vote. So I mean, we can vote to recommend the approval of the policy with the proposed amendments as they exist right now, essentially as outlined by Chris. And then if there is anything beyond that, we just bring that up to the commission that we as a committee didn't discuss this, but we're bringing it to your attention as part of the vote. I think that's the proper way to do it. That way we're not running into any issues about votes or anything of that nature. I don't see a problem with us doing it that way.
Okay, that sounds good.
Okay. So I'll make a motion to do what he just said.
Good job.
It sounded great.
Want me a formalized motion?
Yeah.
So I'm recommending that the committee approve the directive as we sent it out initially with the revisions mentioned at this meeting and in these documents. No further revision will be made without committee approval beyond what we've discussed. Well, the
Without
committee-
commission approval, correct.
Okay.
Commission approval, yes.
Okay.
You bring it into the commission, we're not going
Okay.
back to the committee. I'm
Okay.
just so stuck in that policy committee mode from
Okay.
York. So that we're always having to come back, but we don't have to do that.
Right.
If we can make the changes in the commission and if they're reasonable. You're not rehauling the whole thing, it's not that hard to do.
Right, and we'll vote on them then.
Mm-hmm.
So,
Okay, so I second that motion that Chris made.
okay. So, all in favor,
Sorry.
say aye.
Aye.
Okay, no opposed, the motion passes. Right, okay, so moving on, the next item, Chris, is the QPL audit directive.
Okay, well, this is a sister directive, and it actually went out later, so we have till March 11th for public comments to be received. At this point, we have none.
Okay.
What I will do and what I will recommend is that to the extent these comments impact the QPL audit directive, even though they didn't come in related to that particular directive, that we will also implement those to the extent they're applicable, because they're not identical directives, or we would have one directive. But basically, learn from this and roll it into the QPL to the extent those revisions apply.
Okay. Gary or Barry, do you have any questions on that before I make a motion to?
I'm sorry, Megan, what does QPL stand for?
It's a qualified provider list. They're the contract service providers that
Okay, all right, all right,
Bright
all right.
Start and Mentor and that group.
I got it, thanks.
Wait, you don't like our acronyms?
It's
No,
hard to
that's- No, acronym. I never have liked acronyms for any reason, but this.
Got a few.
Okay, so I'll make a motion to send the proposed audit directive to the full commission for review and adoption.
Second.
Okay, great. All in favor, say aye.
Uh,
Okay, great. That's approved, so motion's approved. So the next item, 7, state-owned provider operator, the 60 facilities, which I know we've talked about once before in a meeting, so
Yeah.
that's new.
This will probably be a standing topic for a few meetings.
Okay,
It's kind of like the contractual compliance thing where we just want to get you guys in the game before we actually come to an actual recommendation, and also bounce things off of you for your thoughts and ideas on how to handle things. But yeah, these are the 60 legacy facilities that the providers operate, but we own. We get into almost daily conversations with providers in regards to whose responsibility it is to maintain certain aspects of the facility or the equipment or painting or HVAC systems. It just goes on and on and on. There is a directive, 300, I can't remember the number, 30005 or something like that, that it goes over this directive, or over this topic. The issue is it's not very well written. It leaves a lot of interpretive wiggle room on the, and of course the provider interprets it as though it's DDSN's responsibility for something to pay for it, and we will take the opposite side a lot of times if we feel we have an argument to make there. But it creates a lot of conflict between us and the providers. That is not the main reason for looking at this. We were instructed by, what was it, the legislative?
yeah.
Who was it? The legislative?
The
Senate report.
Yeah, they want us, out of the landlord business, and it creates an unfair playing field. So, I like to look at things in excess for it to make sense, because when you're looking at big, huge entities that have one state-owned facility, it's not very clear. So the litmus test to me is, if you have two providers, each has one 4-bed home, one home has a home they own and one has a home that we own, both are receiving the same funding for their consumers, assuming the consumer needs are identical. Say the same consumers are in both houses somehow. They're getting the same exact band payments from us. What's that?
I said that.
Yeah.
Would be recoupment.
So the agency that has their own facility pays for their own insurance, their own licenses, their own termite bond, their own fire alarm inspection if applicable, their own HVAC inspections, their own HVAC repairs, their own roofs. You get the idea. This other entity that we own the property, we pay for all the aforementioned for them. So as you can see in a fee-for-service model, even in a band system model, this is not a level playing field at all. And so we are tasked with fixing this. We've been told to fix it. Even if we weren't, this is still something that I feel strongly that needs to be addressed. And so what we're wanting to do is make sure the committee members are getting their questions answered, because when we start addressing this, there could be some conflict with providers, because there are a handful of providers that have vocalized that these facilities are not well maintained, some of that having to do with this conflict and DSN not wanting to pay for things. And they want us to give them some money when we transition the facilities over. They won't take them. And so we've got to be ready for how we want to handle that particular argument. You're going to give them a free house or a free admin building or a free day program facility. If somebody wants to give me a free house, heck, I'll take it. And it's been let's say they've been operating that home for 25 years. They've received extra funding all those years over and above, the same funding, but they didn't have the same expenses to manage. So theoretically, they've been subsidized. Yes, sir.
And they receive hundreds of thousands of dollars a year to take care of the clients they have in the homes. But do you want me to move on, or you want to go on?
Go for it.
I was just going to say that I'm going to ask that the policy committee take this up. The policy is 300-05, and that we are going to consider reversing the policy, basically to make it to where those that are in the providers are to pay for all these expenses based on the houses, and that DDSN should require that they give us a termite bond, and that they have insurance on the houses, and that at that point, which this is something that has to be done anyway, because at that point then the rest of the commission can have as much time as they need to actually transform the house. Actually make the houses.
Transfer the property over to
the property is what I'm trying to say. They can actually transfer the property. We could give them 90 days, 120 days, whatever, to transfer the property. But the point is, we don't pay the bills anymore from the time that as quickly as we can. And this is obviously to make it equitable for all the providers, instead of just some of them that are getting this special treatment, which we all know should not be happening. So, and it should have been. It hasn't been nothing. I think everybody in here knows that at the last meeting we kind of made a decision that we need to do this sort of anyway. But the biggest thing is it hadn't been done since the 1990s, and we obviously need to stop doing it now. So it should have been done 20 years ago. But anyway, it has to be done through it should be done through the policy committee first anyway, because
it's already
because it's a policy that needs to be reversed. And so as soon as that's done, then we can talk about the rest of the stuff. But the other thing is, well, sorry, go ahead. Does anybody
I
want
was
to
just
say?
going to say that we've got, it is on the policy committee agenda, and I'm going to go read through it. Pat's going to read through it. Chris is going to read through it, and we'll start making suggestions as to help clarify some of the language that is not very clear. Because I've read that policy as a provider, and I remodeled all the kitchen. The two buildings I had, I remodeled the kitchens and replaced things inside the building because my folks were living there. So, and if I waited on DDSN to fix stuff, then it would be broken for a long time. So I didn't do that. But so we do have providers that do a lot of the upkeep, but we have some that always have their hands out. So let's read through the policy. That would be a very good segue into the transition. So the policy could actually be the shoehorn to move the rest of it through. So let's go ahead and we'll have some suggested changes that we can then post and get public comment. And I do believe you'll get more than 2 people commenting on that one, Barry. But then we'll move forward with the committee process at that, to look at the comments and develop the policy after that. Okay?
And when and if we get the money from what I was going to say is when and if we get the money from the legislature to make any improvements to the houses, then we can decide on a case-by-case basis which ones we want to improve. But as of this policy, I would say that it says we don't make any improvements, and because we may or may not get the money. It's just basically the thing needs to be reversed. Everything that's down here, if you look at this thing, everything that's down here, the providers should be paying, with the exception of a couple of this number C, number 2 under C. I don't know if we need that anymore, and we might want to do something about 3 and 4 under A. But I mean, other than that, it just needs to be reversed to where they pay for everything, and we say that you have to give us a termite bond and insurance. But anyway, we can talk about that at the policy committee.
Sure.
Sounds good.
Another
Sounds
point,
good to me.
another point worth mentioning is there's 35 CTH2 and CRCF facilities that are in this 60, representing 225 consumers. Room and board costs are not an allowable cost for Medicaid. And so as a result, actually the consumers end up paying all these costs. The consumers are paying these costs in all the other homes that are owned by the providers. So there's another fairness quotient that's built in. So, when it comes down to it, there's only 6 facilities really where the providers are picking up the tab. Now that's assuming the consumers can afford the room and board adjustment. But it's not allowable Medicaid costs, so they need to recoup it through them. But there's 6 admin a day facilities, and of course, again, we've got 32 providers that pay for their own admin day facilities. They pay for everything. And then we've got the 6 that we pay for their elevator maintenance. We pay for their insurance, $3,000 a year. We pay for, we've got,
Yeah.
we pay for the sign if it gets.
We do need to think about the CRCFs though. When you transfer ownership, there could be a problem with licensing because some of them were grandfathered in under a group of licenses. So those, and how many CRCFs?
There's 19 ICFs and 13 CRCFs.
I'm more worried about the CRCFs than the ICFs, to be perfectly honest. So we'll have to do some research on that before we can move forward with that. But even if we get to the point where at least they pay for the upkeep of their own building or pay rent,
Right.
As long as we reverse this policy so they pay all of the fees and everything that they need to pay, then we can take as much time as we need to actually transfer. But I don't see anything in this directive that they should not be paying. And I mean that we should be paying. The only thing we should be doing is requiring insurance and termite bonds, as far as I can tell. Except unless we want to do something about if we get the money to do something about the roofs or something like that. If there is a roof problem, because we'd have to do that if we got the house back. But other than the exterior, there's absolutely nothing that DDSN should be doing for these things. I'll tell you all this last thing I want to say about this. I am meticulous about notes. I am obsessive about taking notes. And I went back and looked at some of my notes that I took years ago for the board that I was on, and I asked a couple of different times over the years. I was 12 years as chairman of that board. I said, why would they pay for our day program and we use it and own it and get paid for it and everything else. You know what the answer I got? I have no idea. That's what I was told. No idea why they would do that.
Yeah, it's things are changing, thank goodness, right?
And I'm just saying, they had no idea why DDSN was doing that. None whatsoever.
So,
It was the only game in town.
just to put a bow on this, we have been working closely with the finance administration on this in regards to what we have to do. We already have a proviso in place that's in state law that gives us the right to transfer these. We have to work with the financial administration folks to actually effectuate deed transfers and so forth. So we've got to, whenever we get to that, we've got to do that. But then we'll do equity grants that will have a reversionary clause in it, so that if the providers decide they want to sell these homes, it would be just like any other home that we paid a grant for. What happens now, if a provider sells a home, as long as they roll that money into a replacement home, we don't care. You keep it all, do what you need to do, because we agree we want to have good houses for our folks. So we don't want anything back. You knock yourself out. But if they sell it and they downsize and they're not going to serve these folks anymore, then we get that money back to the extent we have funds in it, which would be all of it in this case.
That makes sense.
Okay.
All right, the next item, fiscal year 2020, fiscal
Yeah.
status results, cash status.
So these meetings are so early in the month that I really can't have an updated financial for y'all for these for February, for example. We're only on the 4th. But I do feel like as a finance committee, we should be talking about our finances. So maybe sometimes I'll have a report for you and other times I won't. But in this case, basically I just wanted us to have an open conversation about having this as a standing agenda item, so that we can talk about our finances, answering questions y'all have, so that when we go before the full commission and give that really quick update, that y'all don't have more in-depth questions y'all would like to hear.
That was a cleaning group.
So,
Okay.
in a nutshell, as we've said in every commission meeting, and Pat prior to me, we do really good at managing our expenses around here. We're doing great. We're 4% below budget on our expenditures, which is a lot of money when you're looking at $800 million budget. Our issue remains revenue.
Yeah.
We are meeting actively with HHS. We just had a meeting earlier this week, Monday, and we have another meeting with them tomorrow. They still have not given us the money for the 2% cost of living adjustment, or the compression, or the state retirement, or the health insurance increase. That's about $11 million. At 70%, that's almost $8 million, because we wouldn't get the full 11. That's the full 100% number. And so that's sitting out there. We used to be in a split rate environment with case management where we were able to make some funds on the rate, but now it's a 100% pass-through rate. And we don't have an administrative contract for our case management right now, so we're just eating that out of our hide. But we are working on our admin contract overall, and I don't know if you want to talk about that.
I really, it's so hard to explain. We haven't had an admin contract, and Gary, you've been on the board a long time. You've heard us talking about an admin contract forever.
What is that again?
An administrative contract, DHHS, that says that we are authorized to do a scope of work for X number of dollars. And one of the problems we have with it is that we have split rates. So we've been supporting our admin based on the difference in the rate of what we pay our provider and what we keep here. Until we get to pass-through rates, it's going to be hard to sign a contract, but we're still working on it. In fact, we're probably as close as we've ever been. The issue is going to be that this contract is going to be encompassing years 2014 to 2020. So we're going to have a long explanation in the contract as to why we have to go back to those years and kind of formalize the arrangement that was occurring all those years. Because again, my name will be on there, but I I was not here in 2014 in this capacity. So it is a very difficult document to pull together, but we cannot go further in getting admin dollars into here until we actually have a contract. So the thought was back when Tony Keck was here, when he sent out that rate is the rate letter, that there would be an admin contract and all the rates would be passed through, and it would be anything that DDSN need to do administratively to support those waivers would be paid for out of that admin contract. That just never occurred, along with a few other things that never occurred. So it's just one of those things, like cleaning up cost reports, like cleaning up the recoupment issue, like cleaning, I mean, there's so many things that we're cleaning up from those years. This is another one of those things that has to be cleaned up before we can move forward. So we have a nice bright line as to where we go from this point on. I don't know how to explain that okay or no.
It's impossible to explain.
I know, it's like, I don't know how else to explain it, but basically it's a cleanup, is really what it is.
It's a cleanup, simple as that.
So our fiscal results really aren't bad. Our issue is if we can get this revenue stuff squared away, which the three of us think we're hoping that they're going to come through like they should, we're going to be actually in really good financial status. From a cash position, though, we're again very close to break even this year at this point, assuming that we're not getting that money. If we get that money, then we could end $7 to $8 million to the good by year end. One problem I have with this is it's tying my hands on meeting our providers' financial requests. If they have a legitimate band change or a legitimate outlier request, we have no money to give out. So, the provider network is frustrated, and understandably so, but we are strapped. And as Pat said when he was the director, we were burning through $4 to $5 million a year over and above our revenues, but we've flipped that. We're actually cash flow positive this year even with them not giving us this $7 million. We've already paid out to the providers this $7 million. We've paid out the full 11.
Right.
And so we're short that federal piece.
And I don't think they've ever funded that.
No.
I don't think this was ever brought to them before.
Yeah, they've never heard of it.
They never heard this argument. They never heard of the fact that we needed to be funded for that 70%. That needs to be drawn down somehow. And see, they don't do any of this for other providers because they're in a fee-for-service world, and the rate is what the provider gets to do the service, and whatever they have to pay out of that, they do. Ours have always been, we get money from the legislators, we get provisos for increases, and then if we don't present that properly to HHS, they don't understand what we are actually asking for. And I don't think this 2% compression thing, from what I'm hearing from them over there, it's never been asked for before. So they just funded it out of the appropriation.
The two-way settlements that ended in 13
Just
created the opportunity that if they didn't fund it through a rate, when we settled at the end of the year, we would get it then. Mm-hmm. So I think there was a bad habit here where we don't have to get the rate adjustment because if we pay it, we'll generate expenses. Right. And we settle at the end of the year, they'll write us a check for the increased expenses. So that was kind of the easy button, but your rates fall behind too. Mm-hmm. But you keep the money. I think maintain that same model, even though the world changed in 2013. So why we didn't change and adjust, I don't know. We're losing. That's part of our financial problem. That's why we're doing this, because we weren't keeping the rates up, even with this basic stuff. I mean, really, people work hard to reverse it from -4 to literally +7 or 8, and this is really disheartening that they don't see the common sense need to meet. I think we'll get it sooner or later, one way or another. He may not give it this way, but he'll give it to us
just
another way.
Just like the baby net money last year, they didn't want to give us. They ended up giving it to us.
It makes the system healthy.
So we just felt like, and Gary and Barry, if y'all have any questions online, I just want to, I assume y'all agree this needs to be a standing topic, and we just talk about where our cash and our expenses and stuff are and what we're working on. And that way y'all can drill and hammer us with other questions if y'all have any, and we can be prepared for the commission when we go to them. But actually, we're doing very well this year. We're just not healthy. We are way better than last year, but not nearly where we need to be.
Right. Okay.
More information is always good. Thank you, Chris.
Yep. All right. Well, then we'll move to the next item, CFO report.
Yeah, I really don't have anything. I do want to thank Robin for coming to our finance training. I guess it was last week.
Yeah, I think it was.
I welcome any of y'all to attend that. I can't remember if we Skyped that or not. Do we Skype
No, you
that?
don't
training?
do that one.
That one's in person. Okay.
Yeah.
So we do a quarterly basic training, if you will, which some of the folks afterwards said it's not basic enough. We need to basic it a little bit more. So
You know what? You gotta meet people where they are.
yeah,
Where you need them to be.
Yeah.
yeah. So we had some seasoned people in there that got lost on some of the stuff we were talking about. So, but I appreciate Robin attending. That meant a lot to our staff as well as the providers to see her in there.
I also see some executive directors coming to these trainings.
Oh yeah,
too. Not nearly as many as they should.
residential directors, day program directors, HR directors, QPLs, DSM boards.
The better you can
I
balance.
mean, board members should consider coming. Not our board
Yeah.
members.
Yeah.
Agencies.
Providers, yeah.
But anyways, I appreciate you coming. And then we
Welcome.
have a training on April 1st that any of y'all are willing or invited to attend. That will be offered via Skype. And that's where we're bringing in our CPA from Charlotte that does this for a living. And she's going to do a 6-hour training on topics I've given her that are weaknesses that I'm seeing in our financial statements. So that we can start training our finance directors. We are asking that auditors come. We already have 4 audit firms signed up to be present. Hopefully we'll have 6, 7, 8 here. So they can hear it firsthand.
CPEs.
Yep, and they'll get continuing ed.
That way
They're paying $50 to attend to help supplement the cost, and then providers are paying $10 if they're attending in person because we got to pay for a lunch. And there's a lot of strict rules about what we can pay for meals for people here.
Okay. Gotcha.
So
Yeah. All right.
that's really all I had.
Okay. And then,
And
Kevin's not here.
I'm reporting for Kevin.
okay.
Barry-
Internal audit report.
Yeah. Barry, Kevin asked that I tell you that the FOIA code 30-4-90 about board votes,
Yeah, I was going to ask that.
he verified that that's in his training that he's doing. So we're covered there as far as his particular board training that he does.
Would you just ask him to, it ain't got to be sent today or tomorrow because I got enough to do over the next month or so, but would you just ask him to send me the slides on his training just so I can see what they look like?
Sure. Will do.
I don't know if you can send it over email now. It might need to be on a thumb drive because I don't know, it might be too big, but I just wondered.
Alrighty. Anybody else care to see those?
Yeah, you can send it to me. And this particular training is what again?
For board of directors, Kevin, Chris, and whoever, we have folks that will go out and do training for the board of directors that are out there.
Okay.
Upon invitation.
Did you send that to me when I first started? There was some training.
That was one I did for Mary's board when
Okay.
I was consulting and she was there as the ED.
Okay. So it might be a little different.
Yeah, that was provider basis. That was fiscal. His is more
Governance.
training governance,
His is
correct.
governance.
His is not fiscal.
Okay.
Chris was more on the fiscal side because I wanted them to understand what they were hearing in those finance reports.
Yeah. Okay. Good. All right. Well, I think that concludes our meeting. So I guess we'll adjourn. I make a motion to adjourn. I don't know if I need to do that, but
You do technically, but you did a wonderful job again, Robin. I hope I do
Thanks,
half as
Eric.
good as you on the policy committee.
thanks. Thank you so much.